Hi, my name's Lauren Taylor and I'm the Managing Director of Active Property Group. When you're looking at any investment, probably the first thing you'll consider is how risky it is. While there are risks involved in all investments, a good fund manager will make sure that risks are mitigated wherever possible. One way we do this with our pooled mortgage fund is through conducting an extensive due diligence process before we decide to move ahead with a loan. In this video, I'll tell you about our due diligence process, but first I thought I'd give a quick recap of what our pooled mortgage fund is all about. When you invest in a pooled mortgage fund, your money is pooled together with the money from other investors and then loaned out to multiple borrowers who need the funds for business purposes. At any time, you'll usually be invested in around 30 different loans. Investors then receive a return based on the interest rate paid by the borrowers in the form of regular distributions. Before I go into our due diligence process, I'll need to explain the structure of the fund. Active Property Group is the fund manager for the pooled mortgage fund PMAC Trust. We're essentially the investor relations arm of the business, sourcing investors, handling investment inquiries, and disseminating investor information like distribution statements and quarterly reports. Under our umbrella is Private Mortgages Australia, who is the mortgage manager. Private Mortgages Australia is a sister company to Active Property Group, and they handle the lending side of the business, sourcing borrowers, conducting due diligence, and the collection of funds. When Private Mortgages Australia receives a loan application, there is an incredible amount of due diligence that needs to be done before they even consider extending a loan to a borrower. Due diligence refers to the process of investigating a potential borrower to determine their creditworthiness and risk level, as well as completing searches relating to the property the borrower is using as security. Due diligence is an extremely important part of the lending process because we want to ensure that we are making a wise lending decision on behalf of our investors and giving ourselves the best chance of recovering the loan and delivering a great return to investors. There are nearly 100 different checks Private Mortgages completes when going through the due diligence process. I'm not going to go into all of them here, but I'll quickly go over a few of the key areas of our due diligence program. First off is background checks. There are quite a few different background checks we conduct on the borrower, guarantors, and the security property to determine if the borrower is sound and likely to pay back their loan. This includes credit checks, online searches for past transgressions, legal database checks, and ASIC searches. Another part of the due diligence process is obtaining a property valuation. The loans in our mortgage fund portfolio are always secured by property. This means that we have a registered mortgage over every loan so that if the borrower goes into default, we have the right to take possession of the property. We make sure we get an accurate valuation of the security property so that we can ensure we're providing a loan value that is appropriate in relation to the value of the property. Property value is evaluated by a combination of online valuations as well as local real estate agent in-person appraisals, not just drive-by appraisals, and or sworn valuation reports. We also conduct an exit strategy review. The exit strategy is how the borrower plans to repay the loan. While the bank will have a borrower pay off a loan slowly over, say, 20 to 30 years, we will only lend to a maximum loan term of 3 years. So we need to know exactly how the borrower will have the funds available to pay back the loan at the end of their loan term. Private Mortgages Australia will discuss the exit strategy at length with the borrower and make sure it is realistic. For example, if the plan is to refinance to a bank, then we'll need to verify with the broker and check that it's likely the bank will approve the refinance. Or if the borrower plans to sell the property they have developed or renovated, then we also check that the listing price is realistic. Due diligence is a crucial part of the lending process. Protecting the capital of our investors is our number one priority, and this is reflected in the lending decisions we make every day. If you have any questions about our pooled mortgage fund or our due diligence process, then please get in touch at investorrelations@activepropertygroup.com.au. See you next time.